Let me change my background. How you guys doing? Hello, hello. Make sure you can hear me and see me. All right. Good, Sam. Hi, Val. Hello, hello. I am just quickly. What am I doing here? What am I doing? Oh, yeah. Just setting up my calendar so we can have a look at what's coming up this week. And also, um, this is what's coming up this week. And also, what else was I going to do? Something else. Hi, Wei. Hello. There's one more thing I was going to do. Trying to think what it was. Oh, that's right, my background. Oh, so bad. You're supposed to have your background sorted. And where is it? Okay. There we go. No, there we go. All right. There's my background. All right. Okay, guys. Finally, let's get started. So the very first thing you want to do, always before you trade, have a look and see what news is coming out. Oh, sound as well. Let me improve the sound a bit. Hold up a second. There's my microphone. All right, there we go. That should be a bit better. And okay, guys. So let's have a look at what news is coming out this week. So we've got Tuesday, we've got rate statement. There's an expectation of a bit of a rate cut, which might traditionally tends to weaken a currency pair, which is interesting. We've got a lot of Aussie news as well, employment figures out as well throughout the week. So Tuesday, Wednesday, Thursday. And we have unemployment figures coming out for that. Okay, these are all things that could create a bit of a spike on the Aussie pairs. Then we got GDP coming out for the UK, expected to be positive. So we'll see how that is. We've got a lot of dollar news. I think the biggest one is going to be the unemployment claims. Okay, so the biggest stuff that the market will be the most sensitive to will be the unemployment claims. Okay, predominantly because waiting to see what the fallouts of tariffs are. You know, I'm hearing a lot about businesses going bankrupt and a whole lot of stuff. So we'll have to see if that does kick things up. And then we'll see if retail sales also take a bit of a hit. I think the expectation is that the consumer sentiment is going to fall. So, and that expectations of inflation will rise. So that's, I think it'll be interesting to see whether we just see a little bit of this stuff or whether it's quite a drastic response. The market has quite a big response to that. We'll see. All right. Now, let's go over to the markets. So the first thing we're going to do, let's have a look at the dollar, right? So we want to get an idea of what's going on with the dollar. We need to determine if the dollar is getting weaker or stronger. So one of the things I want to show you here is nothing fancy on my chart, by the way, just 50, 20, and 10, simple moving average and a MACD. All I've done with a MACD is just remove the background stuff. So it's just the MACD line. And so let's just clean this up, put this in, and then just add in a few more. So we've got kind of a bit of a move all the way up to sort of 1.2250. And we've managed to sort of break through some of the highs over here at 1.16. We're sort of pushing up through that. There might be a little bit of a resistance coming into these highs over here. And that's really it. So for the you know, what was interesting to me was we really had a strong euro and a weak we had a weak dollar. And then for some reason the dollar decided to strengthen. Now, when I say for some reason, it just a lot of the fundamentals indicate that there's no real reason why the dollar should strengthen. Essentially, if you're going to cut rates, fine, it's not going to happen. So it's a relationship between the sort of bond market and printing money. So if rates aren't going to be cut, then bonds become more attractive. But at the same time, the brand, the American brand, is getting less attractive. So if the sentiment is getting worse and the economy is not doing well, the dollar should also weaken. And then one of the things they want to do is cut rates to juice the markets, which also will weaken the dollar. So all the mechanisms are in place to just get a weaker dollar. But very important, guys, that doesn't necessarily mean that's how it's going to play out. You have to understand that in the system, there's somebody else. There's the euro. And the Eurozone might decide that they don't want a stronger euro. They might decide to hike rates or do something to counter a weaker dollar. So we need to be prepared for that. But technically speaking, this is what I found interesting. So technically speaking, when we go to the daily, we actually had a bit of divergence creep in. Now we've had a bit of a correction. And this is where it gets interesting. When we're below that 50-period moving average, we tend to be weak. We've popped back up above it, but we are still technically in a downtrend. We've got a high and a low, lower high, lower low, and a lower high so far. This doesn't necessarily even mean it's a high just yet. So we have a bit of a problem because we had this beautiful weakening dollar. We had a nice strong euro. Sorry, that's just the mouse acting up. And now the market dropped, decided to go back to strengthening. And we could actually see it in the other pairs. When you look at GBP USD, you can see it here. You can see the continual high highs and that sort of continued bearish divergence. So there was divergence creeping in with the pound against the dollar, which is in a very clear downtrend at the moment. The Swiss franc to the other side. So if you look at the Swiss franc this way, we're starting to produce bullish divergence. So we get lower lows there, high lows there. And then finally, dollar CAD was showing this as well. So dollar CAD was also showing clear signs of, look, I really want to break higher. We've got clear bullish divergence. And so it has managed to break higher. So what we're seeing here, is what we were seeing, I beg your pardon, was signs that all these pairs were diverging and therefore we would get a stronger dollar. Anyway, and so we did. We ended up getting a stronger dollar. But then the jobs numbers came out on Friday, week before last, and the market seemed to struggle with that. And so the dollar actually resumed weakening. And so we're in this really weird place, guys, where is that dollar going to go back to weakening or is it going to stay and strengthen? And that's really what we have to. I was hoping we'd get some clarity on it last week, but we didn't. So we might have to get some clarity on it this coming week. And that is something you need to be prepared for. So when we have a look at cable, I quite like the look of this. We've got a very nice downtrend. We've pulled back in to the moving averages. This would be a really good place for this to continue down, and the momentum is nice and bearish. And the momentum is nice and bearish. So there's a lot that indicates why GBP USD should continue down, possibly in this area. But having said that, that dollar could be doing its own thing. If we have a look at Aussie dollar, we're not getting much clarity here. We've got a series of high highs and a series of lower lows. So there's no clarity coming from Aussie dollar. Kiwi dollar is in a bit of a downtrend as well. You've got the 50, 20, and 10 in a bearish formation. So we could continue lower here, a bit of a bearish candle forming there. So we might find possibly that for the first part of this week, we do continue to get, we do continue to head lower. If we have a look at GBP, we'll have to have a look and see. But I would say this, if we do come up and break above that 1.3585 level, break above these highs, then I think it's very clear that we're likely going to continue to see that dollar go back to weakening again. So although it was weak, then it decided to get strong again. We might find that it ends up going back to weakening again. Another clue, another thing that I would do is look at this. Keep a bit of a trend line here. And if we do ultimately break it, if we break through that, then that would also be another clue. So if we get above the 50 period, if we break above the trend line, those would be early signs that that dollar is going to go back to weakening. And the reason I say that is because GBP USD is one of the weaker majors against the dollar. So if this starts strengthening, if one of the weaker ones starts getting stronger, that's a sign that the pound is strengthening against the dollar and therefore the dollar is weakening. And then, of course, the final for me would be if we break above this high. That would mean that this downtrend has been broken again. So you've got to exercise some caution. This could be a potential short trade, but it could also end up getting broken. dollar yen. So what does that mean? I would stay away from Aussie dollar, Kiwi dollar this coming week. Euro dollar could be interesting. It might end up going higher. So I'd be cautious. I might want to weigh on that or just keep an eye on it and see what happens. So we've got a little bit of sideways action here at the moment. I would say it's not completely unreasonable that if we break higher, we could end up, that would be a clue as to which way the euro is going to go. Or if we break lower, that could be a clue. So this is kind of one of those things of you're going to have to figure it out as it unfolds. You've got a couple of choices. You could just sit on the sidelines and do nothing and just watch and wait for the whole week. Or you could go down to the 1 hour and the 4 hour and try to get a sense of this. But you can see there's a bit of a wedge forming here, which is exactly what is happening. The market doesn't really know what to do. Now, I'm purely technical as a trader, but as you kind of, the longer you're in this game, you start to be able to assimilate a little bit more information because your brain isn't stuck on so much detail. And that's why I'm sort of throwing out the weakening dollar, the various aspects of it, because in the big picture, that dollar should weaken. And we also know Trump has actually said he wants it to weaken. He thinks that if it weakens, it's good for the economy. So we know that we have a president that wants it to weaken, and we know that there is a climate that makes it very hard for that dollar to be in demand. So we're just going to have to see how it plays out, guys. Okay, that doesn't mean that it's going to happen. It could strengthen for the next 6 months, and then it could weaken. So really, as technical traders, our job is to just follow what the market is doing, not what we think it should be doing, because that's where all the pain and suffering and misery comes from as a trader, is when the market isn't doing what you think it should be doing. So we're not saying both things can't be true. We're not saying that the dollar can't get strong and it has to weaken. We're saying, look, it could be strong for the next month, and then it could start to weaken. So your job as a technical trader, guys, is to just trade what the chart is doing. And my advice to you would be to take it a week at a time. So instead of going, oh, it has to crash tomorrow or whatever, go, look, let's see how it goes this week. Because we always get the impression that these things happen really quickly, and they don't always. They could take weeks, maybe even months. Okay, does that make sense, guys? Yes or no? All right, so dollar yen. I quite like the look of dollar yen at the moment. Nice little bit of a consolidation. And I think we could be, judging by the long wicks underneath, we could be getting ready for a breakout to the upside. Dollar yen, I would put on your watch list. So dollar yen, I would put on your watch list. There is a high probability that it wants to continue higher. There's a bit of a battle here, and dollar yen could do its own thing. So Bank of Japan, they work very hard to dance around the dollar to make sure their economy is okay. With the other yen pairs, though, there's a very strong possibility that we're going to see them push high. Excuse me. Yeah. So just take it 1 week at a time. Just go, look, I'm just going to see what happens this week. So, for example, yes, maybe I believe firmly that the indices have to crash this coming week because all the news is so bad. Well, let's just see, because it can take, again, it could take weeks for those markets to drop. So don't, like, if you, and the problem is that if you try to impose an idea on the markets and it has to happen quickly, and then it doesn't happen, you're not, so you need to just keep an eye. And I have found that slowing my expectations helps a lot. So instead of thinking something has to happen quickly, just go, okay, let's just see how this week goes. And then it might not happen this week. It might happen the week after. Doesn't mean you're wrong. It just means that it just doesn't happen when you expect, Yeah. Well, and that's a great point. So Daniel's saying better to see weeks rather than days. And actually, that's a really, really good point, because you don't always get all the trades you want on a Monday and a Tuesday. They aren't spread out evenly. So when you think about it in terms of a week, you give yourself a bit of leeway. You're like, okay, if it doesn't happen Monday, probably Tuesday. And actually, that is how it goes. That really is. So you want your brain and your mind to be much more in tune with what the market is, right? It's just like, okay, it's like if you're going surfing out in the ocean. Some days you get the waves, some days you don't. But you can't expect it to give you what you want every single day. So it's better to have that mindset. So per week is a much healthier approach. All right. So dollar yen, I like the yen pairs. Like pound yen is also looking good. It's got a key level wants to break through. Guys, I think you could see some big moves across the board. So Aussie yen also sitting up here with a bullish candle, but the trend looks good. Kiwi yen also setting up with a bullish candle. CAD yen also, so we've got uptrends in place. Forget about the moving averages for now. So the very first thing you should always do when you look at a chart is always look at the price action, meaning always look at the candlesticks first, like the structure and the colors and the shapes. Always look at that first before you look at the moving averages, before you look at the indicators. this thing down here is just, that's the very last thing that you look at. You don't look at it first. So if you find yourself looking at this stuff first for clues, no, the best thing is the market structure. So I think that the yen pairs could really be the ones that offer something. Ideally, we turn around and we start continuing higher. So the 4-hour and the 1-hour would be good to watch for that. If we start to break above new highs, if you've got alerts and you can put them in, put some alerts up across above the highs of all these yen crosses. And then if they get triggered, it's happening across the board. So in other words, I'm looking for multiple yen pairs to go higher. And I think that the yen pairs and the dollar pairs could provide the best trends in the coming weeks. There's not a lot happening with the Aussie pairs. Let me just show you this. So like Aussie Kiwi, if we zoom out, it's moving a little bit higher, but it's not magical. If we look at Aussie Swissy, it is trending down, but when you get to a patch like this where it looks like you've got a big trend, as soon as you go down to the daily, it becomes very choppy and noisy. So not really seeing too much of that. So if we look at Aussie CAD, very choppy and noisy. This is a weekly chart. So I'm showing you this because when a weekly has a good trend, it tells you where the next weekly candle is probably going to go. Okay. And so if you know where the next weekly candle is going to go, you've got a good idea of where the whole week could potentially go. Aussie Sing just sideways. So look at this. This is like 3 or 4 months of just pure sideways. And you can't really trade that because it doesn't travel far enough to get to your target. So the Kiwi pairs are the same. Kiwi Swissy is pushing higher. The Swissy pairs are starting to move higher. They are starting to break through and push up a bit. So you'll see CAD Swissy starting to move up a bit, but it's also very choppy. So if it's a Swissy pair or an Aussie or Kiwi pair, they're largely very choppy. The only exception is Swissy yen, which has a very nice trend, and the Aussie yen and the pound yen pairs are a little bit better. Okay. So I would stay away from those. The Euro pairs in general are just bumbling a little bit here. So Euro Aussie sideways, Euro Kiwi pushing up a little bit, but you don't have to overthink it. Euro Swissy also pushing up again, very similar to some of the other Swissy pairs battling with resistance levels. Euro CAD. So there's not a huge, like right now, there's not a, look, it's largely to do with tariffs. We're going into uncharted territory here for a while. So we want to be a bit cautious. The pound pairs as well, also sideways for a bit. Pound Kiwi pushing up a little bit, but they're just not very strong, clear trends. So I just want you guys to be cautious about that. So pound Swissy here might offer something. We might see some good trends to the upside there. We've turned around, so we've got a new uptrend to the upside there. So that looks pretty good. Okay, so yen pairs and dollar pairs for me are the favorites. Dollar CAD could be very interesting. So dollar CAD has broken up through support, resistance. It's in a very nice area here with a 50, 20, and 10 in a bullish formation. This is trending higher, which is bullish. So, excuse me. So we might actually see a move higher from there. And if we do, that's a decent target. So this might be a nice reward to risk setup. Dollar Sing, let's have a look. Also very similar here. Also looks like it's turning around. So again, hinting at a stronger dollar. Dollar Sing, dollar CAD, looking like that. Dollar Swissy also looks like it's turning around, could potentially move higher. So it's above that 50-period moving average, coming back and testing it. That also hinting at maybe it wants to go higher. Dollar yen has pulled back quite a bit. Not as clean a trend, but it might very well be getting ready to push higher. So all of these dollar pairs all look like they are waiting for that dollar to strengthen. And as I said, excuse me. So GBP, not really looking that weak at the moment, but euro dollar might also be getting ready to go down a bit. So just be prepared for both. That's really what I wanted to show you. All right, next up, let's have a look at gold. Okay, so gold is pretty much range bound at the moment, stuck between the top and the bottom. That doesn't, by the way, mean that it will just clearly or cleanly just go from the bottom to the top. You can have a scenario like this where it does this for a while. You can even have something like this, where it goes up like this, then straight down. So we could have a variety of things, but it does look as though it's pushing higher. When we zoom out on a weekly, we get a little bit more of a consolidation, and that's a very nice bullish candle. So at some point, I do expect this to break out. It's leaning more to the upside here. It just looks a little bit more bullish. When you look at all these candles here, there's just more green ones. This all looks very nice and bullish. It's in the moving averages. It's a really good place for it. And when it breaks out, if it does, we could see quite a bit of a move. We could see this head up to $3,000-$4,000. We'll see. And again, that would be, I would think that if there's concerns about the dollar and the reserve currency and the US and instability, if there's concerns about that, I could see gold going up as well. Well, so good question here. So Daniel's saying, should we buy gold in advance now? So I would, first of all, I think that's a great question. Let's distinguish between trading and investing. So investing, you're going to buy and hold something for several years at a time, like 2 or 3 years. If you were going to buy and hold gold, okay, so very important terms and like disclaimer here. I'm not your financial investor, you know the whole story, but I also want to show you, gold. Do we have the whole thing here? Gold had a bubble before. So gold went all the way up to here, and then it broke down, and it went from 2011 to 2019 before it even broke out again, and up to about 2020 before it came back up to all-time highs. Excuse me. So it's in a bubble now. The only thing is, I can't tell, and I don't think anyone can really tell you how much longer the bubble's going to go. And if it does burst, where it's going to come down to. It could come down to 3,000, could come back to the highs here, and I don't know when that's going to happen. So if you're going to buy gold as an investor, you just need to be aware of this scenario. You need to say, look, how much do I buy? And how would I feel if it ended up going down for 10 years and losing half its value? You've got to include that scenario in your decision-making process because it could happen. It's happened before. It's happened within the last 20 years. It happened for half the time. So it's very real. It could happen. Now, alternatively, obviously, could keep going up. And again, you need to have a plan in mind. You go, okay, well, if it does go up, what do I just keep holding it or do I cash out? Like, what do I do? You just need to think about this stuff. This is for everyone. It's not just for Daniel. It's for everyone because it's a good question. That's really what you're going to do when you're thinking about it from an investment perspective. You just have to be prepared for that. You go, look, if my entire life savings is $1,000 and I put that in there, I think there's better places you could put your money that for the next few years that you might get better returns. But if you wanted a bit of gold, that would be fine. But to go all in would be risky for me. And also you've just got to you also need a plan for it, how long you hold it on for. Because what's the point of having it if you don't ultimately take some of it out, right? So that being said, guys, from a trading perspective, you want to wait for it to break out. So you want to wait for it to break out. And you might do that as like a, break of a trend line or break of a high or break to the downside. And you want to wait because you don't want to presume yet. Like I'm saying, currently it does look bullish, but it could fail. It could fail. So normally you want to wait for it to break out to confirm the breakout before you jump on board as a trader. And as an investor, as I've just explained, you've just got to be aware of all the pitfalls. So hopefully that's given you a bit of an answer there. It was a complicated answer. Sorry about that, but hopefully it's helped you. And I just think it's important to distinguish the difference between trading and investing when you do it, Joe. But guys, silver's looking good. Okay, so silver has more upside potential. When you kind of zoom out, it hasn't, it also had some all-time highs around 2009 going up to that point. And so it has lots of upside potential from that perspective, but it's not a smooth trender. Like it can, but I would say 95% of the time, silver is just too choppy and messy, whereas gold is nice and smooth. So normally you would just focus on gold, but recently silver has been trending a bit better. And we have a nice bullish candle here. So this is an actual potential trade idea, which is, this looks like it's going to break through. It's definitely a level at 38.50. We could see this breakthrough, and that could be an opportunity. So I'd keep an eye on this, the highs over here of this weekly candle. If we start this week and we break through, we could see that happening. All right, and it's unusual for silver to be very bullish when gold isn't. So the bullishness in silver is adding weight to the analysis on gold, that it could break out and go high. All right, guys. Crude oil, to me, look, I could be biased, but to me, crude oil's garbage. Like, I don't see a lot here. I see it sort of going down, lower highs, breaking through support. Now it's come back up. It's producing a bearish candle. I think we're likely to see this go down I just also don't think that crude oil plays a part in our lives the way that it used to 20 years ago. We don't care about it as much because most people are moving to electric cars, although crude oil is obviously used in other industries and in other things. It's not in the average person's mind the way it used to be. And we certainly don't really feel like you should be invading a country to take their oil anymore. It just doesn't make sense. Excuse me. MACD is also bearish. So I do think that in the longer term, we'll continue to see this slide, at least technically. Makes sense that we'll see that happen. Even when it had a bit of a burst, it just failed again to come to stay there. So it actually came back down. So to me, it's just more bearish than bullish. But from a trend perspective, it doesn't really offer anything. It doesn't really have any consistent trends. So I would, as a general rule, I'd be very cautious about engaging in crude oil. All right, let's go and have a look. Let's go and have a look at one more thing. Let's run through the indices. I won't keep you too long, guys. Okay. So, technically, I've said this before, I'll say it again. This is what's known as a V-shaped recovery. Okay, that's a V-shaped recovery. It's a particular pattern. It seems to be mainly for indices, doesn't show up very often. We had one over there as well. And a V-shaped recovery is often followed by a bull run. Okay, so, the question might be, but if everything is so bad in America, for example, how can their stock market be doing so well? And, there are times when parts of the stock market are owned more by the middle class. And when I say middle class, I mean middle income brackets. And then it's better proportioned. And in that situation, it's probably more representative of the economy. But the 1% now, the top 1% now, own more than the entire middle class globally. So just think about that for a second. And a lot of their wealth sits in stocks. So when we're looking at this, we're seeing more of just the top 1%. This is what the top 1% are doing. This is where their money is going, which is why we do what we do. Yeah, we can piggyback on that stuff. But I'm just trying to explain to you that it isn't representative of the economy. And right now, it looks like it's getting ready to be bullish. Now in America, they'll be giving tax cuts and corporate cuts and QE, and they'll be printing money and doing stuff. So that's a lot of money that companies can borrow and put into the market. So we could very, very well, and he wants to push for rate cuts as well. So obviously, there shouldn't be, the whole point of America is supposed to have all these different sections to the government so that you can't influence them. But that's gone out the window now because it's not a democracy anymore. So we'll see if that happens. There's just no law. Those rules don't necessarily apply. So we could very well see a rally in the markets, but that is not necessarily connected to the economy. And remember, we now know that they intend to not release bad numbers. So if there's any bad numbers about jobs and various things, they're going to fire the people who report bad numbers. So the data coming out of America is going to be very kind of sketchy, but it's in theory is obviously not looking good because it's just not looking good. So technically, the markets are looking bullish. Does that mean that you couldn't at some point be in a bubble? Could we be in a bubble? We could be in a bubble. Part of the clues of being in a bubble is when, excuse me, is when the market doesn't respond to stuff. The market is usually very skittish. If there's some sort of scandal or the wrong word is used, then historically the market would have a bit of a tumble. But they bombed Iran on a weekend and the market just kept going. All this talk of doesn't matter what they're saying, the market just keeps going up, which is an indication that it's in a bubble, right? Jobs numbers aren't looking good, dollars weakening. There's all kinds of various things that just indicate things are not great, and the market just keeps pushing higher. So I think it's safe to say that it's in a bubble, but it could also remain in a bubble for 6 months, 2 years. It's hard to tell. That's why I say let's take it a week at a time. This is a double top because we saw the reaction. It's too soon. It's too soon to determine if this is a double top because you need to see the reactions. You need to get a confirmed swing high. So it's too soon. So the market has come back up, taken a bit of a kick. Now it's setting up. It's bullish again. Looks like it wants to kind of push through. There is some divergence here. I'm not disagreeing. So I'm saying to you, there's two scenarios here. One in which over the coming years, we see the market take a big hit, and another in which the market appears to be setting up to rally. And I think it's really important that we follow the technicals during that period. Just follow the technicals. It doesn't mean that you can't be right in the end. but it might also be months away. The markets could just keep being rallying, and they could be printing money technically. So when we look at this, we had a very strong bounce off that, and we're coming up to test this level. The market pushed down, and it's produced so far. It's early in August. It's already pushing higher. So in other words, from here, you can see the knockback. But here, when it got knocked, it recovered. It wasn't a big knock, and it's recovered already. When you look at it from a weekly perspective, you've got a pullback. You've already got a bullish candle forming. So in other words, the buyers are coming in sooner. They're coming in sooner because they anticipate that they'll take another run up to the high. Let's not say they're going to break through this time, but they're going to take another run at the high, if nothing else. So this week, it's highly likely. It's highly likely that we will see at least a run up to there. Let's see how it reacts when it gets there. Let's see if it breaks and closes above that, or let's see if it gets its ass kicked and gets knocked back down. S&P as well. Remember, at all-time highs, pullback, very, very bullish. Although we do have this bearish divergence, guys, and we had a bit of a correction, we're now sort of back on a new thing. So this would count as a big correction, which gets rid of this divergence. So now we're on a new curve. Okay. The NASDAQ as well. Sorry, so the S&P looking bullish, the NASDAQ closing near all-time highs. Okay, so just what I'm saying is, if there were signs of weakness, they're not showing up in the technicals, and we've got to go with the technicals. I could see continued bearish divergence here. So it is climbing, and at some point there will be a correction, but we could be, honestly, guys, we could be way away from that. So let's, like I said, just take it 1 week at a time. I think one of the clues would be a big bearish weekly candle, which we just don't have yet. We're getting bullish weekly candles. We don't have a big bearish one. But even here, we're sort of struggling with the level of resistance on the FTSE, but the FTSE is up at all-time highs. So that looks nice and bullish. The DAX is coming back up to its highs as well. So if you go and have a look at it from a monthly perspective, it's right up here near the highs. And it's overextended, it's showing a bit of exhaustion, but it just keeps pushing. So that might end up being a hanging man. So that might end up, we might see that. Look, the other thing I need to bring up before we wrap up, guys, September can often be a bearish month, like historically. So this is what can happen. We could see this. Let's just sort of talk about this idea. Let's just say from about the 24th of August, so late August, maybe let's just go from like next week until maybe beginning of mid of October. Let's just say here. We could see, I'll keep these lines up. We could see a bit of a correction happening in the markets if that's going to be the case. September is historically the most bearish month, and it often starts in tail end of August, and it usually recovers in the beginning of October. So let's be prepared for that. Let's see if that happens. That will also be a big clue. If it hardly drops or it breaks up, that'll be also a clue that possibly the market is way more bullish than it appears to be. Okay, so that gives us a lot to kind of keep our eye on this week. The Nikkei also looking really bullish. When you zoom out here, we're also sitting at all-time highs. So the Nikkei, which is one of the weaker ones, is now up at its all-time highs. Well, at least for recent times. The Hang Seng is looking very nice and bullish. This is one of my new favorites here. Beautiful breakout and a retest and a bullish candle. So this is looking set to go higher. So let's see how it plays out throughout the next couple of weeks. Again, guys, 1 week at a time. We've discussed the possibility that if it is going to have a correction, that September would make a lot of sense. So we might start to see that. But currently, man, this looks like it just wants to keep going. And the ASX as well, at all-time highs here as well. And it's not overextended. It's just leaving the moving averages. So we're seeing a lot of bullishness there. So let's sum up. We've got US news coming out this week, a lot of Aussie news. Excuse my dog, she's excited to go for a walk. And we've got the indices that continue to look bullish. We've taken into account September. We might see the markets turn and have a bit of a correction. And it often looks very bad when it happens. Like if it does, it's often like a big low. And it seems terrible, and then it just recovers. So we'll see if that's going to be the case. The markets are quite bullish. Gold, we're waiting on it. It looks like it's leaning towards a bullish breakout. Silver is looking bullish. And the dollar, we want to see what happens with the dollar this week. A lot of them seem, all the dollar yen, dollar Swissy, all of those seem to hint at a stronger dollar. And some of the other ones are giving us mixed signals. So be prepared for that. Val is asking, is September also a bearish month for gold traditionally, just like for the stock market? Not to my knowledge. Not to my knowledge, yeah. And while we're on that, by the way, not everything has to always correlate just while we're on that. Like, for example, gold doesn't always have to be a hedge against inflation. You know, if the dollar's weak, doesn't mean anything for the stock market. If you're not seeing that correlation, then it's not correlated. So just be careful, because those, just make sure that if you expect something like that, that you are seeing it. If you're not seeing it, then it's not correlated. It's a good question. So no, I would expect right now it's usually for the stock market. Gold is still nice and bullish. People could be looking for gold for safe haven, and they could be looking to, or it could be diversification for investing. Bit of gold, bit of Bitcoin, bit of the indices, bit of stocks. And so we could be seeing gold move for different reasons. We'll see. We'll see. Anyway, all right, guys, I'm going to let you go. But thank you very much. Listen, enjoy the rest of your, well, it's the rest of my Sunday, but it's your, I was going to say to you guys, have a fantastic week. I'll let you go. There's plenty to look at. There could be some good, decent trends. There could be some good stuff. And it's absolute pleasure. And I hope you guys found this instructive and useful. Remember, if you can't reconcile what you're hearing in the news and what you think the market should be doing and what it's doing, you always go with the technicals. Okay, you always do that. Guys, absolute pleasure. Absolute pleasure.